Today in the crypto space, we see the market still showing a bit of negativity. Bitcoin down approximately 1% and Ethereum down approximately 2%. And the rest of the crypto space, the altcoins, some of them coming down to lower levels near Protocol, Aptos, IMX, Pepe, and many others. Here on the channel, we are looking for opportunities. The question is, are we going to get a bounce at any moment now? In today's video, we're going to talk about the general market, and we're going to use Bitcoin as a leading indicator. And more importantly, we're going to talk about Velo. Velo is a project that is looking really good for that breakout. So you know what? Let's talk about the news, let's analyze the charts, and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome. On the channel, we talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins, looking for opportunities. Whether we go up or down, bearish or bullish, it doesn't matter. All we want to do is stay one step ahead of the market so that we can capitalize on any of the volatility. And if you appreciate the strategy, subscribe to the channel, click the bell so you don't miss out on any of my future videos, including the live streams at 8 p.m. EST, where we talk about crypto news and price action. Guys, if you have any projects you want me to cover here on the channel, feel free to let me know in the comment section below. You can hit me up on the socials. The links are in the description. Better yet, guys, join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. All right, guys, let's begin. Let's see what's going on here with this market. The overall market cap continues to dip down, slow and steady, lower lows and lower highs as the trading volume goes sideways. You know, this is a scenario where we're not seeing a lot of market participation in this dip. The reality is that it is coming down, no doubt, slow and steady. But as the volume continues to be stagnant, it gives us an indication that there's not many sellers, or the sellers are not increasing. We're not getting that volume as we come down, as we see that sell pressure. So that means that, you know, we could be seeing that we could be getting a reversal very soon. We could be getting a sign that the bears are done pushing down, that in fact they don't have the strength to continue causing that negative pressure, as we're seeing, again, no volume in the bearish momentum. Unfortunately, you know, we are not seeing a reversal just yet, but it could be in the works, and this is why it's so important to keep an eye on this market. You know, try and stay one step ahead, start DCAing, doing your thing, and finding those horizontal levels of support, guys. And this is what we do here on the channel. We look for opportunities. All right, guys, let's begin. Let's scrape through the top 100. Then we'll take a look at Bitcoin as an indicator to see what's going on with Bitcoin, because of course, if Bitcoin shows us some strength here, if Bitcoin dips, we're going to see some volatility. And then we'll take a look at Velo, a project that I did cover earlier on, and currently it's actually looking pretty good. I feel like the setup is viable. I feel like the setup, you know, is showing us a breakout setup, which is something that I don't really, you know, get into very much. But when I see the clarity, you know, it starts to give me some indications that maybe it's worth taking a bit of risk. All right, guys, let's begin. Let's see what's going on here. As you can see, as we go through the top 100, there are a few projects that, you know, are doing okay, but the majority of them are either slowly slumping to the downside, slow retracement to the downside, which is okay for profit taking and all of that before we get the nice bounce. But we do have some projects showing a bit of strength. Now, what's interesting to focus on is Tron, because Tron is highly correlated to USDT, right? You know, a majority of the transactions do happen on USDT. It's definitely an indicator for what's happening with the USDT market, meaning the stablecoin market. So what I do notice that although we're not getting much fluctuation, it's only up 3.6% in the last 7 days. It's the structure that I appreciate. The fact that we made a higher high, which is great, and we're going for another impulsive move or consolidation, perhaps before another continuation. And another thing that I found interesting is that while the rest of the market is kind of down approximately 2 to 3%, we see Tron kind of going sideways. This is not a bad thing, right? Not a bad thing at all. As we keep on going down, guys, you can see these fractals are pretty much sideways again, or slumping down. Look at Polkadot, not looking the best, down 10% in 7 days, guys. That's not a good look whatsoever. And then the opposite side, you got, you know, Litecoin. Litecoin is looking pretty good. I remember when Litecoin was one of the major movers right before we got our bull run. I forget if it was last bull run or the previous, one of them, or both for that matter. Litecoin did very well prior to the major rally. So could this be an indicator? Could this be the scenario? Possibly. Litecoin is usually pretty good at front running the altcoin season or even the bull market. Uniswap kind of going sideways. We want the Ethereum, like I mentioned in the last little while, we want Ethereum to lead the way. We need Ethereum to lead the way. It's the most healthy way to see the altcoins rally and to get that Bitcoin dominance rolling over. And if we see the Ethereum ecosystem, including its DEX, Uniswap, do very well, it is a good indication that we are seeing the strength out of Ethereum. Guys, we gotta really get behind Ethereum here, because ultimately it has the market cap that we need, the strength in the market that we need to basically give us that indication on the Bitcoin dominance that all of a sudden altcoins are showing some dominance. This is what we need. Near protocol kind of going sideways, and the rest of the market pretty much doing the same thing. A few dips here and there. Aptos coming down, pretty much erasing majority of the gains so far that it has experienced in the last little while. This is the name of the game here in the market. You know, we get rallies up, we get quick retracements and things like that. This market has been in hard mode. Look at all of this. Choppy. You know, slow grind to the downside, and then you have Aave. Aave looking great, 16-17% in the last 7 days. Not bad of a move right there. I think that would probably be one of the major gainers in the last little while, next to Thorchain Rune. Obviously today it's not doing much, flatlining, but it's all good because again in the last 7 days it's up 17%, so that's a really good one. I've been building a position on Thorchain, expecting for it to one day to really wake up and start melting faces again, as it has done a few months back when everybody was looking at Thorchain. All of a sudden it was too late. It left the station and started running, and now, you know, did retrace significantly, and I'm buying the dip and have been accumulating. So hopefully we see Rune kind of wake up here. As we keep on going down, we have Phantom finally waking up. If don't knock it, it's up 13.2% in the last 7 days. Not bad. Slow grind to the upside. So we do have some random projects that are showing some strength, which is good. But generally speaking, as a whole, as you know, the overall consensus in the market is that it's sideways and slightly slumpy, right? So this is the thing here, guys. I think that this is the best time to slowly DCA. And personally speaking, you know, DCAing can come in many forms. I personally take two ways. I take two strategies. My two strategies are: I wait for red days, double-digit dips, right? When I see the dips very significant, and also based on timing. Like if it's been a while since I DCA'd, I like to DCA at least once a week to start deploying and sprinkling some capital in some of my you know, positions just to top up, and especially if they have been in a retracement. But my bigger purchases are when we get those double-digit dips. Now, are we in a double-digit dip right now? Not really, guys. Not really. Let's be real. Last time I DCA'd, you know, when the market dumped, it wasn't that bad. And all of a sudden now we're pretty much coming down a little bit more, but it's nothing significant yet. I'm waiting for those double-digit dips, those real severe red days, and then I'm going to be deploying. In the meantime, I'll be peppering in a bit of capital, a few buy orders here and there, but at the same time, trying to raise capital for those double-digit dips. This is the strategy, because ultimately, eventually we will get that reversal, guys, and hopefully we will be prepared and our portfolio will be prepared for it. All right, guys, let's begin. Let's take a look at Bitcoin. I know you're here to talk about charts as well, so let's do that. Let's get right into Bitcoin. We'll take a look at Velo in a second, but Bitcoin, what is going on here with the Bitcoin price? Technically, nothing much. Technically, we see a Bitcoin kind of doing its thing below the horizontal. Not a good look. You know, this horizontal line, we've been talking about it here on the channel significantly, and as long as we stay below it, and you can see we did get rejected off of it, it's a bit bearish. But ultimately, we got to pay attention to the structure that it's in, and this descending broadening wedge is still here. After 150 days of building, we're still here within structure. Let's take a look at this in a bit more detail. Generally speaking, these patterns break out bullish, like I mentioned many times. So the question is, when is it going to happen? It's not guaranteed, guys. We could definitely come down and make a lower low. We can come down to 44k is my bearish target, 44.5 more or less, right at the bottom of this volume gap. So in the meantime, like I was saying, you know, ultimately, you know, if we're going to get a double-digit dip, if we're going to come down hard, we're coming down to about this level right here. I would say at about 48 down to 44, depending on if we respect the diagonal. If we don't respect the diagonal, we're coming down to 44, fine, and I'll be buying those dips, and that's going to be the double-digit dip. The 20-30% dip that we might get into the market, in the altcoin market, if that happens. But in the meantime, I already deployed a nice portion of capital right into this dip, which was a double-digit dip from this level to this level. So I'm happy with this entry, and I'm not willing to continue deploy heavily without getting a lower low. Now, it doesn't mean that I'm not going to be buying in and DCing. I'm just going to be doing it slower, and I'm going to be doing it more based on timing. If once a week, I more or less, I go in, I go and check, when was the last time I bought, and I look at, are we in a downturn? Fine, might not be a lower low, but it's a bit of negativity, and I deploy a little bit, pepper it in, maybe a nice 10% bag, 5% here and there, type of thing, especially on the projects that I'm super bullish on, right? That's one thing that you got to understand, is that your position size should be directly proportionate to your fundamental bullishness, the bullishness that you have on the fundamentals of the project. And that's very important too, because you're aligned fundamentally with the amount of risk you're willing to take on that project, which is important. Now, again, back to the TA, you can see that the price is below the 200 daily and below horizontal. Guys, it's been disrespecting the 200D ENA for a good while. It's been disrespecting the horizontal for a good while. So could we really rely on the 200 EMA? I would suggest that we kind of let it, resolve itself. Don't expect this to be respected at the current moment, because we've been going above it and below it and above and below it for so long that it could be that we get above it and then spring and then get up to 72 in a heartbeat. Just think about it. The bulls have a thesis. The bulls are thinking this is a bull flag. Let's get onto the 4 hour, a nice little retracement, impulsive move, retracement, and then we go for another impulsive move to 72. Very possible here. Nice V recovery showing a lot of strength, and a bit of strength here from the bulls not letting the price fall basically lower. You can see that momentum volatility is oversold, looking for a pop to the upside, and we left oversold conditions without seeing the overbought condition, which means that ultimately we could see something like this. We're leaving oversold, we came up to this level, retraced, and then we go for overbought and we get very extreme. And once we get extreme, that's where we get the majority of the impulsive move, and that could take us to 72K in a heartbeat, right? So this is something that we got to really prepare for, is a quick moves when you least expect them. And that's usually where a lot of people, get those emotions, because they missed out, fear of missing out and all of that. So this is where we're at with Bitcoin. It's a very tough scenario. I wouldn't really be trading this. I would be waiting very patiently. In fact, what I would be doing is accumulating on spot. Spot positions will probably be the safest bet right now at the current moment, because we don't know where it's going, the market's going, and we do see a lot of, a bit of fear in the market, fear, uncertainty, and doubt in both traditional markets and obviously in the crypto space. We're seeing a lot of fear, uncertainty, and doubt. So just be careful here. I think a slow and steady DCA strategy is definitely viable at this moment. All right, guys, let's take a look at Velo. I want to take a look at a bit of the Velo chart, because Velo, in fact, is looking pretty good. If you look at what's happening here, okay, fine, we ran up very, very strong out of these bottom ranges, out of the accumulation ranges. I want you to ask yourself, what do you think was happening in this level? We were making higher lows, and a bit of volume was coming in. A lot of people accumulating and preparing for an impulse. That's basically what we got. We got a nice higher high after many higher lows. So we're doing pretty good here. You can see the chart is actually looking pretty strong. And then we got a dip. Then we got a huge, move to the downside. Now, all of a sudden, we are in a consolidation. And what's interesting about this consolidation is it's a very nice W formation. And W formations are indications of pivot point reversal patterns. Now, as a reversal pattern, especially as you reach the previous high as a reversal pattern, we are currently technically confirming a higher high here. And excluding this high, of course, because really right now we're contending with this one. So this is something that we got to really understand, is that when you have a little bit of ambiguity brought to us by, some price action like this one that went rogue, and then this one right here, we totally broke above. And that's pretty cool, because ultimately we are at a level of a breakout zone. And breakout zones, sometimes give you a bit of an advantage. The advantage is that, especially when you get a volume gap right above, we can snap from this current price of about 0.01, which is 1.2 cents, to this level to about here, which is at about 1.6 cents, which is a very nice little move, right? If you start taking a measurement from bottom to top, from where we are right now to pretty much risky zone, that's a 30% run. 37% run is definitely something not to fade. You got to pay attention to these opportunities. Now, you guys know I'm not a breakout trader. It's not something that I appreciate. Why? Because there's tons of risk. And if you look at the price, really, what's the risk? The risk is that you bought the top, that you bought the local top. That's the risk you take. That in fact, we could come down, no doubt, we could come down and either produce a higher low like we've done here, right? Close. Just look at the bodies right now, exclude the wicks, because even if you include the wicks, it's still a range low. We could definitely make a higher low, or even come down for a range low for that matter, right? And we could be back to about, a fraction of a cent once again. And that's the risk you take. You're getting rejected. You're basically buying into the resistance. And that's a bit of a problem. Now, because of the ambiguity of this high. I get it's very, very difficult to really classify a confirmation, meaning do we wait for it to break above backtest what a general area, I would assume this area right here, and this would give you the second opportunity to buy into this pump. But when you have a volume gap like this, which means that you have a lot of weakness based on supply and demand, it just basically means that it may not reverse, it may not come down for that back test. Now, what I want to do is double up on this box to emphasize the importance of this area due to its weakness. It's got more weakness than this zone right here. So what it does really mean is that we could get rejected right around this area. We could come up, maybe get rejected right here, come back down and back test, get the confirmation low, the higher low, and then start going up and start breaking right through. Now, does this have to happen? Nothing of this has to happen. What I am telling you is that we're getting a nice W formation, which is a breakout formation. And we could definitely hit the price target of about 1.6 cents. So be prepared for that scenario. Now, how are you going to do this setup? Before we do that, let's take a look at, let's put a red arrow here to suggest this is where risk begins. And obviously right around this level, this is the best level to get in from a risk to reward ratio opportunity. Right around here, I would say this would be a good DCA zone. And then where we are right now as a breakout trader, just be careful. So what I'm going to do is I'm going to put an arrow, but I'm going to make it yellow just to be aware. Like if you're going to breakout trade this, guys, assume the risk, take it on the chin, understand that where you're going to put your stop loss. That's the biggest problem, is where you're going to put your stop loss. And we'll talk about that in a second. Let's take a look at momentum and all of that. Momentum, honestly, is looking pretty good. We're leaving the station. We left oversold conditions. We did not get overbought, which is great. And we got the retracement, got the confirmation low, the higher low. And now we're trying to track to overbought conditions. Just keep in mind, like I always say, when the momentum gets above the 70% mark is usually when we get the biggest impulses in price. Obviously to the upside here because we're going overbought. Now, when we reverse and we come down to oversold and we break below 30, that's where we get the biggest moves to the downside because we're extremely oversold. So what does this mean? That means that we're leaving the station and potentially getting overbought here, and Velo could be getting its breakout. And this is what I'm trying to say here, is that although there's risk, there is indications of a potential move to the upside based on the momentum. And you can see the expansions as we are basically, the price is kind of consolidated in this area. The expansions to the downside are getting weaker and weaker and weaker as momentum is getting stronger and stronger and stronger. So this is a good sign. Now, what we could do is obviously wait for volatility, which is the orange line. Wait for the orange line to come down and get oversold in an extreme way down here, and then go long. That's possible, but you might miss out because really sometimes what happens is the volatility line hangs out at the top for a bit and jitters around, and while the expansion happens, right, it jitters around like something like this or whatever. It hangs out a little bit, and then we see that expansion, we see the breakout, we see all the price action that we're preparing for, and we don't get the opportunity. However, waiting for down here is probably a better risk reward opportunity because you know that the market could be pushing down in the next little while, in the next couple of days, and obviously coming down to range lows. Now that's the question. If it does break out and this comes down, is this dip in volatility just going to give us the back test on the confirmation that I was talking about? Let me revisit what I was saying. So if the volatility comes down after in a couple of days, could it be this that is going to be pushing down, back down to the confirmation, the back test, using previous highs as support for a confirmation low? That's the question here, guys. And that's what could happen, is that we get a nice strong move to the upside, break out, and then use the volatility to the downside to confirm the back test of that breakout. Guys, that would be super epic. Of course, a nice entry for a nice expansion, a lot of possibility here. Okay, so let's take a look at the trend oscillator. The trend oscillator, you can't deny it, is looking bullish. EMA is facing up, green histogram bars. We got lots of signs of divergence right into here, multiple drives as the price action is moving to the upside, bullish. So we get both momentum and trend oscillator looking really good at the current moment. Of course, again, assume the risk, and back to risk to reward. Let's get rid of some of this artwork so we can have some clarity here. Let's get rid of this, and I'll paint them back as we need them. For now, I just want to get a trade setup going for you guys. These are the lows that we got to watch out for. Of course, these are lows that we got to understand. Those are range lows. This is where risk to reward ratio gets very, very healthy. And this is what I want to do, is create a setup so you understand what I mean. If we get in right now, hypothetically speaking, right now as a breakout trade, number one, we're getting a little bit of volume. Not too much, just a little bit. We identify the volume gap. That's a weakness. That's an opportunity. We want to take profit perfectly right here at 35% gains. Really nice. Obviously, where are we going to put our stop loss? Range lows. Maybe these lows. Which lows are we going to have to break to invalidate this bullish thesis? Technically speaking, maybe this one right here. Guys, look at the risk to reward. It's pretty trash. This is the problem with breakout trading. This is the biggest problem with breakout trading. Now, if we expand this so we can focus on this a little bit more, we can see that the opportunity lies when we backtest. Because upon a backtest, like I said, if we get rejected right around here and we confirm, and then we get that support right into here, we can put the stop loss right below that confirmation, right below this horizontal. And then our risk to reward becomes a lot better. Obviously, a 4-to-1 is a lot better than a 1-to-1 or less than 1-to-1, like I showed you all the way down here. So this is the issue. However, if you do not get into a position right now, what happens is that you run the risk of missing out for a nice breakout to hit this target of a 35%, 34% move to the upside. This is the risk you take as a breakout trader. W formations are great. They're great indications, especially once you break the previous highs. And currently, Velo is trying to make it happen, guys. If it does make it happen, expect a nice pop to the upside to about 1.6 cents, like I mentioned. And obviously, de-risk at that level, trail up some stop losses, take 10% of profit off the top, and at least put your trailing stop loss right around this level, just in case we do come down, to induce a bit of pain and take back those gains to the market. At least you can walk away and close that position well into profit. Plus your 10% that you took off the top, you'll walk away a profitable trader. And that is the way you protect your gains, guys. Part of your strategy should include defensiveness, defending your initial investment, number one, and number two, defending your gains. Guys, if I've offered you any value in this video, do the channel a massive favor, slap the like button. It does really help out with the algorithm. If you want to follow me on the socials, the links are in the description. Better yet, guys, join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. Take care, guys. Have a good one. And don't forget, buy the dip.